It's the final day of the business week. This is Business Incorporated coming to you live from Lagos, Nigeria. Thank you for joining us. I'm Chimeze Obi Iwagu. On the program today, resource rich Guinea grapples with population discontent over mining revenues. Namibia secures a $10 billion Namibian loan from the African Development Bank. Plus, Kenya borrowed $1 billion via a syndicated loan from commercial banks. That's about $200 million more than anticipated. Let's get started. And to the markets here in Africa, the bears reared their heads today at intraday trading at the Nigerian stock market after weeks of bullish trade. The index was trading low, down by 0.11% as at midday. The drop in the share price of Stanbic IBTC and Unilever at intraday may have contributed to that drop. In the meantime, South African market was also trading waters, down 0.14% at intraday. Nairobi Stock Exchange was up 1.30% on Thursday. In the Middle East, equities rose on Thursday as oil prices edged up, while the final batch of quarterly results from Saudi Arabia drove market sentiment. Now, Thursday was the last day for Saudi companies to report interim earnings. The market has not reacted hugely to results so far, with the exception of some stocks like Fawaz Al Air and Zen Saudi. After their earnings came in ahead of expectations. Now, the index closed in the red, down 0.69%. Our shares in Abu Dhabi National Energy Corporation, the state-controlled oil explorer and power supplier, rose after the company swung to a tiny profit in the first quarter owing to higher commodity prices. At the end of trading on Thursday, Abu Dhabi index went up by 26.52%. Dubai financial market was up 0.74%, and Qatar was trading high at 1.19%. Of course, the markets are closed today for the weekend. In Europe, investors continue to react to the latest batch of corporate earnings, while oil prices extended gains on renewed optimism over potential production cuts. Our Conrad Boulson is standing by to give us details of today's trading day. Good afternoon, Conrad. Thank you very much for joining us. Well, earnings remain one of the top trading themes as this week comes to a close with Vivendi, ArcelorMittal, Petrobras and ThyssenKrupp on the street. Give us your reading on these results.
Well, Jimmy, I think the German share index sums it up quite nicely. You can see its movement here. This is a, picture book sideways movement, and for a good reason, because all those earnings reports which came in today, they contain good and bad, light and dark. Let's start off with the dark. The ThyssenKrupp and ArcelorMittal numbers are not rewarded by investors. The share prices slumped after the quarterly earnings reports came out. Quite obviously what the investors don't like is the negative cash flow in those balance sheets of both large steel makers. And traders told me that there is some concern that the steel makers might get to feel higher commodity prices soon. On the other hand, Petrobras, the Brazilian oil maker, came in with strong earnings. The shares here in European trading are higher. And Vivendi, the media conglomerate from France, also strong earnings. And Vivendi announced takeover ideas. It wants to take over the French marketing and advertising agency Havas. And that's also rewarded by investors. They like the idea. The shares in both Vivendi and Havas are in great demand for today.
Now, aside from those earnings, quite a number of economic data are on the watch today. Looking at Wall Street, the U.S. retail sales figure and inflation data are being watched. Do you think this set of data can repair some of the dent made by the FBI commies firing by President Trump?
Well, Chibi, of course, you know, inflation data is a very important piece of data for the Federal Reserve, for the central bank in America, as well as retail sales, which are a tracer, of course, of the spending of private households. And, you know, of course, this will be important data for the markets as well. And a trader I talked to just before the show told me that traders on Wall Street will be eager to digest economic data again after all this political talk from Wall Street, which wasn't really pleasing people on the markets. You know, all this talk about erratic decisions by the White House, about people, all this talk about how the Russians might have been involved in the Trump campaign. That all got to the foreground, and what got really in the background is talk about the economy, about, you know, infrastructure spending that the Trump administration had announced, also about the tax cuts. Where are they? That's what market people would like to talk about, and that's why they hope, you know, that all this data, this batch of data coming in from the United States might, you know, get the focus a bit more to the American economy again.
Well, while investors in the U.S. are digesting those data coming out there, the investors in Europe are also looking at Germany's data. Now, today, the Germany's Federal Statistics Office published its provisional GDP data, which shows a 0.6% growth in the first quarter. Now, tie this to the latest Eurozone industrial production, you know, that dropped 0.1% in March, and of course give us an insight into next week.
Well, this data too shows how traders today have to deal with a bit of a mixed bag, you know, not only in terms of corporate earnings, but also the economic data isn't really clear. But also here, traders told me not to overinterpret the slightly more negative than expected industrial production of the Eurozone. It's only really slightly lower than what investors or economists had anticipated. The German growth data, though, contains a few positive surprises. It shows that businesses have come back to spending. The investments in larger investment goods like, you know, factories, machinery and stuff like this has increased during the first quarter. And here, and this is particularly positive because Germany often got the blame from its trade partners that the state and also German business weren't doing enough here. So this is a very positive piece of data. And what's more, also employment, the employment factor in GDP is strong. 640,000 people here in Germany have more than have in Germany a job than they used to last year at the same period of time. The number of people who have a job is at a record high, and this of course sets a strong basis for future domestic growth.
Well, Conrad, it's been a wonderful outing with you this week, so enjoy your weekend.